Imagine finding out your spouse secretly insured your life for $200,000. That happened to Rachel. And the most disturbing part wasn't the policy. It was who would get paid if she died. A real story.
She was looking for their tax returns. She found them. And then she found something else, a document she had never seen before. A life insurance policy. $200,000. With her name in the beneficiary line crossed out. And his sister's name written in.
Rachel and Tom had been married for 11 years. 2 kids. A mortgage they were almost halfway through. A life that, from the outside, looked completely ordinary. Tom was an accountant. Careful with money. Methodical. Rachel worked in HR, she understood people, she understood documents, she understood what signatures meant. She trusted him with the finances because he was good at it. He paid the bills, handled the investments, managed the insurance policies. They had a system. It worked. She never questioned it because there was never a reason to. In February, Rachel was doing their taxes. Tom was traveling for work, a 3-day trip to Chicago. She needed the previous year's returns from his filing cabinet. She knew where the key was. She had used it before. Nothing about that morning felt different. She made coffee. She sat down at his desk. She opened the cabinet. The tax returns were in the 3rd folder. She pulled them out. And then the folder behind them slid forward, and something fell out. A policy document. From a life insurance company she had never heard of. Dated 14 months earlier. The policy was for $200,000. Taken out on Rachel's life, without her knowledge, without her signature, without her consent. And the original beneficiary, Rachel's name, had been manually crossed out in pen. And replaced with his sister's name 4 months after the policy was opened. Rachel sat on the floor of the home office for a long time. She told a friend later, "I just kept reading it. Over and over. Thinking I was misunderstanding something. That there was an explanation." There were several things she noticed as she read. The policy had been taken out in Tom's name, as the policyholder. Rachel was listed as the insured. That meant Tom paid the premiums. Tom would receive the payout if Rachel died, and Rachel had never been asked to sign anything, because in their state, a spouse could take out a life insurance policy on their partner without the partner's direct signature, as long as they could demonstrate insurable interest. The premium payments had been coming out of a bank account Rachel didn't have access to. One she hadn't known existed. She photographed every page of the policy document. She put it back exactly where she found it. She closed the filing cabinet. She locked it. She put the key back, and then she went to the kitchen, poured the coffee she had made an hour earlier, and sat at the table until Tom called to say his flight had landed. She said, "How was the flight?" He said, "Fine." She said, "Good." She didn't say anything else. Here is something most people don't know. In most US states, it is completely legal to take out a life insurance policy on your spouse without telling them, as long as you can prove financial dependency. Thousands of spouses have done exactly this. Most of the time it is entirely innocent, estate planning, financial protection. But sometimes, the timing tells a different story entirely. And in this case, the timing was everything.
Rachel didn't call Tom. She called her sister, who was a paralegal. Her sister told her to write down every detail she could see on the document before she put it back exactly where she found it. Then act completely normally when Tom came home. Over the next 4 months, with her sister's help, Rachel began piecing together a timeline. It took patience. It took access to documents she had never thought to look at before. And it took the slow, terrible realization that what she was uncovering was not an accident. The hidden bank account had been opened 26 months earlier. She found this by requesting bank statements for an account number she spotted on a transfer in their joint account records. A small regular payment she had never questioned. The life insurance policy had been taken out 14 months ago. Tom had consulted a divorce attorney for the first time 22 months ago. She found this from a credit card statement, a charge to a law firm she didn't recognize. When she called the firm, they confirmed Tom had been a client. They couldn't say more. For months before the hidden account was opened, 8 months before the policy was taken out, Tom had already been sitting across from a divorce attorney. The family court judge would later describe this timeline as deeply troubling. That is a direct quote. Deeply troubling. Tom filed for divorce 4 months after Rachel found the policy. He did not know she had found it. He did not know she had spent 4 months building a file. And he did not know that his own careful, methodical paper trail, the same instinct that made him good at accounting, had documented everything she needed. He had been meticulous. So had she. Rachel's divorce attorney filed 3 arguments simultaneously. The first was dissipation of marital assets. The hidden account had been funded with money redirected from their joint finances over 26 months. Total in the account at the time of filing, $43,000. The second was fraudulent concealment. Tom had actively hidden financial activity during the marriage, including a bank account and insurance premiums paid from undisclosed funds. The third was the most significant. The life insurance policy, combined with the timeline of the secret bank account and the prior consultation with a divorce attorney, formed what her attorney called a pattern of premeditated financial separation. Not a single mistake. A pattern. Documented. Dated. In Tom's own handwriting. The life insurance policy itself was not illegal. But in the context of the divorce proceedings, it became evidence of intent. Evidence that Tom had been planning to exit the marriage and had been preparing financially for nearly 2 years. The family court judge agreed. In the asset division, Tom was ordered to pay Rachel 60% of all marital assets, not 50%, specifically citing the hidden account and the pattern of concealment as justification for the unequal split. The life insurance policy was ordered canceled as part of the settlement. The hidden account, $43,000, was transferred in full to Rachel. Tom's attorney fees came to $31,000. His share of the assets, after the 60-40 split and his legal costs, left him with significantly less than he had spent 2 years carefully planning to walk away with. The exit plan cost him more than staying ever would have.
Rachel's attorney raised something in the proceedings that the judge acknowledged but could not pursue in family court. The beneficiary change, from Rachel to Tom's sister, had been made 4 months after the policy was opened. The attorney noted, for the record, that changing a beneficiary away from a spouse, combined with planning a divorce, raised questions that went beyond financial concealment. The judge said nothing. But she wrote it down.
Rachel gave one interview after the settlement was finalized. She said, "I don't think about the policy the way people expect me to. I think about the filing cabinet. I think about the fact that I found it by accident. I was looking for tax returns. What if I hadn't been looking for tax returns?" She paused. Then she said, "And that's the thing, isn't it? Most people never look. They trust. And the ones who are planning something, they count on that trust." She was quiet for a moment. Then she said, "I'm not angry at him for being careful. I was angry at myself for not being careful too, but I've let that go. You can't see something you were never taught to look for." Rachel kept the house. The kids live with her primarily. She has a new job, full-time now. She handles all the finances herself. Every account is in her name. Every document is in a filing cabinet she bought. She knows where every single piece of paper is. And every year, she does her own taxes. She kept the filing cabinet. She put a new lock on it. The key is on her keychain now. Not in a drawer. On her person. Every day. Rachel's paralegal sister shared 4 things she now tells every married person she knows. 1. You have the right to know about every financial account your spouse holds, joint or separate. If they refuse to share, that refusal is information. 2. Check whether any life insurance policies exist in your name. You can request this through your state's insurance commissioner's office. It is public record. It takes 15 minutes. 3. A spouse who suddenly becomes secretive about paperwork, mail, or financial documents, especially after a period of distance or tension, is a signal, not a quirk. 4. Hidden bank accounts leave traces. ATM withdrawals just under round numbers. Transfers to accounts you don't recognize. Small regular payments with no description. A pattern your eye learns to see, if you know to look. Next week, a woman's best friend of 14 years became her business partner. They built something together. And then, quietly, methodically, her best friend began taking it apart, one signature at a time. That story drops Monday. Subscribe, because you won't see it coming either.